All right. Another great day comes to an end. Hope you guys had a fantastic day out there in the markets. But it's about that time of day again here, folks. Time to get back to work. Thursday evening, after all. It's March the 11th, 2021. My name is Joseph. And as always, welcome back to your nightly newsletter. Now, if you're tuning in for the first time tonight, it's so great to have you with me because my job tonight is to help us find the best trades for tomorrow. That's finally Friday's trading session. I got a jam-packed video in store for you guys tonight. Charts are all ready, as you can see in front of us. Got the E-mini, got the Nasdaq, and of course got the gold, that yellow metal on our radar for tomorrow. Lots of great setups we're tracking for Friday's trading session. We finish up this second week of the month of March. But here's the big question. Do we trade these moves today or do we fade these moves from today, right? We got the big jump up, right? All three of these markets jumping up, right? We talked about that $1.9 trillion stimulus bill in last night's newsletter. So of course the buyers loved it, right? They sent the market higher. Do we trade it? Do we buy the pullback now, looking for new highs? Buy the pullback now, buy the pullback? Do we trade these pullbacks, looking for another leg higher? Or do we fade these pullbacks, right? Fading them, selling the pops. What do you think? Do we trade it or do we fade it? That's the big question on my mind tonight, and that's the most important topic we're going to cover to make sure you're ready for Friday's trading session. Get a bunch of great setups we're tracking to both trade it and fade it as we go into Friday's trading session. I've got a great video in store for you guys and gals tonight. Great to have you with me. Before we jump in, though, and get this party started, I'm excited to go to the video tonight. Lots to cover. Before we jump in, though, I just want to make sure to remind you, we publish this video newsletter every evening with our best trade ideas for the following day. I don't want you to miss our next video newsletter, so make sure you subscribe to our YouTube channel, and when you do, hit that little bell icon so you always get that notification every time I publish something new. So make sure you subscribe, and don't forget too, if you have any questions for me tonight, you can always type those questions down in the comment section below. Don't be afraid to drop me a question in the comment section. And while you're down there too, if you guys enjoy the video, if you like the video as much as I enjoy making it for you guys every evening on this newsletter, do me a favor, hit that like button, hit that thumbs up button for me here on this video. That goes a long way to help me grow this YouTube channel. So thank you so much again for tuning in. Make sure you subscribe. And again, drop those questions in the comment section and hit that like button, hit that thumbs up button for me here. It means a lot to me here. You guys tune in and support this channel here at School of Trade. But enough of the introduction, though. Let's get this party going. Thursday evening, Friday is right around the corner. What do you think? Do we trade it? Do we fade it? Do we buy these pullbacks and trade it, or do we fade these pullbacks, right, and send it back lower again? S&P, Nasdaq, gold, got a bunch of great setups here. Let's crack this thing open here first on the S&P. Now, what happened here on the S&P? What's going on the E-mini? Well, most important takeaway here today, we of course have that big, strong breakout, right, to begin the session overnight into that trading range, right? That range, of course, acts like a magnet. That apparently wasn't enough because the buyers ran another leg higher. They complete their measured move, and my goodness, they finish just a hair, maybe 2 or 3 hairs away from that all-time high up there. All kidding aside, though, very, very simply put, we see that bulb jump up into that sideways trading range. That's a big, big deal because that range is a magnet. The buyers get one more leg going higher here, complete that measured move, barely missed that all-time high, and now, of course, we start to dip down right off that high. A pretty good amount of momentum here on that 1, 2, 3 reversal, right? We talk about these reversal patterns quite a bit on this video newsletter. So I got to say, we definitely have a lot of bullishness on this chart right now. There's no doubt about the bulls having a lot of the overall direction. But I'll tell you though, the last few hours here this afternoon do not look very encouraging here for these buyers. We've got what we call an overshoot of a measured move. Basically, the market goes above a measured move, comes back below it. Now that measured move acts as an area of resistance. So we have kind of a little bit of almost like a drop ceiling, right? It's almost like a little drop top down there, right? Get the all-time high, Little bit of resistance up there at 53.5 area. So this might not be that easy. I'll tell you, looking at this chart right now, it's really difficult to justify being a buyer on this. Again, you've got that kind of false top up there around the measured move. Momentum has really turned for those bears right now. You got that magnet, for crying out loud, right? That range magnet down to 39.25, right? 3,900 is a range from earlier on in this week. So very, very difficult for me to want to buy this market. I like the idea of being a buyer, but looking at the structure of this thing right now, I'll tell you right now, the only way that I could really safely buy this market right now would be if I anticipate the bears coming in, because that's what I'd like to do. What I'd like to do right now is hopefully get this market to pop up into my battle zone up here, get those buyers to come in and try to buy a pullback, and then just simply sell right into their stop loss with a failure pattern, into a pullback pattern, right? And possibly into a strength trap as we go lower. So a buyer failure off the high into a bear pullback as we run back down into that range magnet, and possibly tomorrow all the way back down to that big round number at 3,900. So again, if I had it my way tomorrow, right? If the trading gods bless with a good setup tomorrow, it'd be that strong, right? Not that strong, but it'd be a pop up above the moving average, get up into some of this area of resistance overhead, get those buyers to come in to try to buy that pullback. I do not want to buy into those highs right now. The odds are not on their side to buy that pullback. I'm going to play the odds on the opposite side, sell into stop loss with that failure pattern, and then as the moving average comes over, grab that first pullback right off the moving average. Couple really nice short setups to drop this puppy back down into that range below us here for tomorrow. So that's how I'd like to trade this thing as it goes higher. And honestly, if the market does, for example, make a run back up to those all-time highs, you're still in a great position to trade this thing, to fade this thing, I should say. Kind of going on theme here, to fade that. But here's the problem now. If they return back up to retest those highs, now we basically, if they get that all-time high or they double top on this, that is pretty much a stamp of approval for the bulls. So now if they can muscle their way back up to retest those highs, it's still a great place to look for a short, but I have to be a little more patient this time. Now I'll let the buyers try once, let those buyers try twice, and then I'll look to hit them in their stops, right? Then we'll look to sell short into those stops and get this run back down. And then remember, when you get these, we call these nested failures, right? When you get buyers trying once, buyers trying twice, these will oftentimes really run, right? And really run. An easy trick after you grab that short on the nested failure, just turn it around, find that hidden channel off those lows and grab that first pullback. So that's some easy way again. Even if we do run higher here, take out those highs. I still think we get a great shot here to sell short off those highs, because all will be at that point is it'll be a strong run up and a double top, right, as we go back down again. So I'm not totally worried about selling that top here as long as I can get a failure set up, and then if not, that pullback pattern on the way back, right, on the way back over here. Now, I know you're thinking, okay, how do we trade it? How do we buy it? We talk about how to fade this thing now, right? How do we buy this market? The only way I can feel comfortable being a buyer on this is if I exhaust the sellers trying to do exactly what I was just talking about, right? So what I look for is as the market pulls back here, get the bears trying once, get the bears trying twice, and ultimately try to absorb the bears coming in, who I would assume are going to try to attack this area up here and short this thing. If I can get those bears to commit, now my only problem is location, right? Location is the challenge here now. So the best way to get around that would be to get a trap entry and buy below that low. This is going to be a tricky setup. This is going to be one of those thread the needle type of setups. It is definitely a valid setup to get long, But again, understanding the fact that we have that kind of drop ceiling, we've got that overhead resistance, that momentum turning, that range below us, I would anticipate bears will come in and try to attack a little bit here, trying to get that easy drop back down. Once we see the bears commit a couple times, I can look for those traps, right, and take it higher. Target obviously is back up to retest that high, retest those all-time highs. Now, what if we get none of this, right? What if all we get is a straight run higher, right? We heard from Capitol Hill yesterday about the passing of that bill. Maybe we see more good news overnight. Who knows, right? Things could happen in Asia overnight. Let's say we jump up, right? We really jump up and the buyers hold that pullback and they start to run, right? We now have that 1, 2, 3 breakout pattern going higher. 1, 2, 3 breakout. No, I'm not going to trade that first pullback, but I would love to trade the first pullback off the low of this new channel. We call these 1, 2, 3 breakouts or 1, 2, 3 reversals. And again, I'd like to see a strong pop up, take out those highs or not, doesn't really matter. But as long as they can hold that pullback and we get some strength coming off of that moving average, that's going to give me a very high percentage opportunity to buy off the low of that new hidden channel. All right, so really, I think pretty easy plan of attack there as we go higher. And remember, I'm not just blindly going to buy the low of that channel, right? We're not blindly buying the low. We're looking for patterns like failure setups. We're looking for pullback patterns, looking for strength patterns, and looking for traps off the low of that, right, of that channel. So if you think about it, right, that trend line is right here, right? We pull back. We're usually going to be just below the moving average. We can look for seller failures, right? Seller failures into pullbacks, into strength, into traps, right? We can find all of those entry setups, right? Those entry triggers in and around the low of that new channel. Now, we are obviously at all-time highs right now, right? You see that label right there. So there's not a lot that we can kind of, predict as this market goes higher. I mean, I could put together some big projections up there, and it's kind of a waste of time right now. We have to see how the market does up there and see if it'll hold above those all-time highs, right? What is likely is we may see something like a strong move up, a pullback to the moving average, right? A strong jump up. Once we get that 1, 2, 3 breakout now we mark the high, we mark the low, and there's a really good chance, right? We'll get another leg off of that low. It's just trying to anticipate how far that move will go is anyone's guess, really. It really is anyone's guess, right? It might make a measured move. We got that leg up, maybe makes a measured move. But again, these are all-time highs up there. A lot of this will be kind of a FOMO blow-off top up there. So again, 1, 2, 3 breakout into that hidden channel pullback, failure patterns, pullback patterns, strength moves, trap setups. We're looking for all of those off the low of that channel here. And then of course, as we go lower, right? As we go lower here, here's one thing I'm definitely watching, right? So we know how to short this thing if it pops up, right? What if the market starts to run lower, right? Then what do we do? There's a couple things I'm looking for as the market runs lower here. First things first, if it starts to nosedive and runs lower, one of my favorite setups here is called a 2-try trap. So if the market starts to nosedive and runs lower, we have a good idea of where it's going, right? It's probably going back into that big range from before. So if we come out, overnight, right, the market starts to really tank here and run lower here, this of course will become a very strong move down. We're not going to be able to really draw much of a channel here. So strong move down, shallow pullback, lower low in price, right? Look for those traps as the market starts to accelerate, all right? So if it does start to accelerate, running lower, if all it does is just kind of grind lower, right? Then all you got to do is just extend this channel down, move it a little bit lower here, wait to get that pop up, and just like we said before, look for that pop, those buyer failures into pullback combinations, right? So if it does grind lower, again, right? If it kind of keeps grinding lower here overnight, right? Just keep on extending that channel down, bring it down, find those prior swings, get up, right? Get up above those prior swings, Get those buyers to come in, have them commit. Once they do, we know exactly where those stops are. We can sell into stops. We can sell those pullbacks. And again, roll this thing back down, right, to retest those lows. So even if it does start to grind lower, I'm not going to short it. We're going to wait for that pop. But if it does just collapse, right, if it does just collapse back down, that's where that 2-try trap setup will come in. Don't worry about that range here. If it's strong enough moving lower and you get that shallow pullback with that lower low, that trap will be a very desirable short as we go lower. And guys, don't forget, I'm just simply drawing on the charts right now, marking up where and what I'm looking for tomorrow. If you want to see more examples of these specific entry setups like traps and failures and strength moves, we cover all of those setups in our free trading course. I'll send you hundreds of examples of how we use those setups in our trade room. I'll put a link that will pop up there in the upper right-hand corner for you. Again, I'm just simply going over the basics right now. If you want a deeper dive into the entire strategy, lots of examples of how we use the strategy in our trade room, and of course, all the entry setups, grab that free course link in the upper right-hand corner, right? You'll definitely enjoy the free course. That way, the next time that I say pop up, buyer failure into pullback combination, you'll know exactly what setups I'm talking about, and you'll know the rules and what they really look like on a real chart. All right, so now get a pretty good plan there on the S&P 500. Will we trade it or we fade it tomorrow? That's the big question. I'd love to fade it. I would love to fade this thing. We'd love to short that pop here on the S&P. Only time will tell, though. We'll trade whatever we get, obviously. How about the Nasdaq here? Over to the Nasdaq. The Nasdaq is a little bit similar, right? It's relatively similar here to the S&P. We had that strong breakup, right? Of course, into that trading range. And you'll notice, though, one thing about the Nasdaq is the Nasdaq did not finish the measured move. We definitely are seeing a lot less excitement, I would say almost underwhelming on this Nasdaq, right? Now, of course, the Nasdaq has plenty of space overhead. The S&P, of course, is right into those all-time highs. The Nasdaq still has plenty of space to make up. So could be a pretty good day there on the for the Nasdaq buyers tomorrow if they decide to trade this pullback. But will they? That's the big question right now. Don't forget, that range below us, just like on the S&P, that range below us is acting as a price magnet. That range back there, right? That range from earlier this week, both of those acting as price magnets. So when I look at this Nasdaq, the bulls got their breakout. They got that range, but it doesn't look very convincing, right? The buyers, in my eyes, the buyers need to either get a deep pullback to attract more buyers in, or they've got to send this thing higher. They got to give us a little more juice, right? They got to give us some more on this, because right now, this does not look very convincing. I'm not too keen on being a buyer on this pullback right now. Now, little bit different than the S&P, because the S&P had already come down a ways for us, right? So we already had a lot of momentum for the bears. We already had that trend line drawn over, right? So we had a lot more information on the S&P. And honestly, that's exactly what I would love to see from this NASDAQ for tomorrow, right? Look at the S&P, and you can almost get a glimpse into what would really be a nice shot going lower here. What I'd like to do is hopefully get this thing to keep grinding lower, mark up that hidden channel off that high, find some of these prior swings, get up into that prior swing, use that moving average as that failure into pullback combination, just like we talked about on the S&P. What if the market goes higher, though, right? What if the market runs higher here? Can I buy it? Can I sell it? That's going to be tricky because we don't have a lot of space overhead. You'll notice the NASDAQ has kind of similar to the S&P, where it looks like there is definitely a bit of a kind of like a drop ceiling, right? Like a false top on this chart right now. So if I try to buy this pullback, for all I know, I'm buying right into that area of resistance, and this is just a blow off top right there as we go lower. So really, for me to want to buy this market as it goes higher, I'm going to have to see them take out those highs, hold that pullback, and go. If I can get this thing to 1, 2, 3 breakout, now I can mark up those lows, I can mark up that high, and I can look for that first test off the low of that channel. No, I'm not going to be comfortable buying that first pullback, definitely not with this type of environment, but I will gladly buy that first pullback to low of that channel using one of my 4 entry setups, right? My failures, my pullbacks, my strength moves, or of course my traps, and you'll learn those in that free trading class that I mentioned earlier. So that's kind of the big deal here going higher, right? If I want to buy this thing, and again, plenty of space overhead, I got to get that 1, 2, 3 move, take out those highs, hold the pullback, buyers show us they mean it, then I can mark up that high, I can mark up that low, and I can buy that first pullback off the low of that channel. Another one of my favorites is called a 2-try breakout, strong run higher, shallow pullback, higher high in price, trap low, right? Great spot there for a trap. And an added bonus, if you can add on trend line off the high, trend line off the low, grab that trap at the low of that channel. So as the market runs higher, maybe all we get is that strong run, shallow pullback, higher high, trap low, or it's that 1, 2, 3 where the emphasis is on the third leg, mark that high, mark that low, and we're buying that pullback. Again, with that 1, 2, 3 breakout, we'll look for the specific entry setup off the low of that channel, right? We're not just blindly buying the low of that channel. We'll use one of the entry patterns we talk about in that free trading course linked up in the upper right-hand corner. So now we know how to buy it as the market's going higher. What I would like to do though is try to sell this thing as that market goes higher. We already have the buyers you can see here trying once, trying twice, trying 3 times. So if I can get this market now to make a run higher again, I would love to get that same idea as we talk about on the S&P. Let those buyers try a couple times, use those stop losses as fuel, sell into those stops, and then again, watch the moving average coming over, short the pullback off the moving average. A nested failure, because after all, you are going against a trend here at this point, right? This market has not turned bearish yet, definitely not as much as the S&P has. So if we do make a run going higher here, take out those highs, I think it's still a great spot to look for a short as long as we can kind of rope in those buyers, let them try a couple times, and then we can sell right into those stop losses. One of the easiest ways to short the top of a range like this is to wait for buyers to commit. And we'll talk more about how we define that in our trading classes here at School of Trade. Wait for those buyers to commit, and then just simply target selling into their stops, because what will happen is you'll get this big fat red candle there, right? Once those stops get run, buyers get stopped out. The only way they can get out of their position is to sell their way out of it, and that's what drops the market from there. And then, of course, to roll over from the pullback and then back down into that trading range, because that range, of course, is acting like a magnet down below us. At the same time here, right? At the same time, like I mentioned before, if I can get this market to run lower a little bit further, right? Kind of mimicking the S&P now what I can do is, let me draw this a little bit better here for us. We go lower here. If I can get this thing to go a little bit lower, I can now swing in and find a channel there, find that channel here, grab that swing, get up, get around the high of that channel, up around some of those swing highs. Same thing, right? Same thing. Now this momentum feels a whole lot better. Now I can trap in those buyers trying to buy that pullback now. I can use this range as a magnet, and I can sell the sucker back down into that trading range, right? That range below acting as the magnet down below it. So I would love that. That would be kind of what I would like to see here for tomorrow. Get this thing to grind lower, right? Then pop up above those highs, and then get that failure back down again. The only way I could buy this market, as I mentioned before on the S&P, the only real way that you can safely buy this would be probably to get back to the low of this channel, right? That trend line right there at 13,013, right? That area right there. I would imagine that's where a lot more buyers will be coming in here around this area. The problem is, though, by the time we get there, as you can see, this market will feel very bearish. There'll be some trend lines coming down here. That's why I'd like to short it, right, as it pops back up. However, if I can piggyback off my plan from the S&P, if I can get these bears trying once, trying twice, and then get that trap low, that is a great looking buy setup. But as you can see though, it's going to take some patience. It's going to take some patience here. Gotta let those bears try a couple times here, anticipating they're going to come over and try to whack this thing, right? They probably will. And so bears try once, bears try twice, let them try a couple times, and then we'll look for that trap, right? Hopefully it's off the low of that channel. It doesn't really need to be, but it definitely wouldn't be a bad part, wouldn't be a bad thing at all. As long as I can get the bears though, committing once, committing twice, and again, I don't want to buy too high up here, right? So I'd like to get that trap to avoid buying that high. Not a very easy market to buy on this pullback. Okay, so we know how to trade it now. We know how to fade it. Another big question would be, what if this market collapses, right? What if we keep on running lower? Again, without sounding like a broken record on this, if the market kind of grinds lower here, the plan is pretty straightforward. Keep marking those swings, find those hidden channels, and we'll simply look to short the pops, right? Back above those highs here, buyer failures, going back down into that trading range. Again, I'm just simply drawing on the screen of some scenarios I'm looking for here tomorrow. You can find a lot more detail of all this stuff inside that free course I mentioned, linked up in the right-hand corner. You'll see exactly what I'm talking about when it comes to a failure pattern, pullback pattern, trap pattern, things like that. Those are actually the entry signals we use to actually trigger the entries in our trade room. And then again, if the market simply collapses here, if it really collapses here, we get that strong move down, that shallow pullback, that lower low. That is exactly where traps will come in, right? Traps will definitely be on our radar. Again, if the market really collapses there. This range below, and this will also apply to the S&P as well. If we do end up back in that range, and we start going sideways back inside that range tomorrow morning, this becomes a bear market into a trading range. How do we trade a market? How do we trade a bear market that goes into a trading range? We stay out of the range. We find levels of resistance up above the range, and we combine those levels of resistance with what I call a two-try failure pattern. We wait for the buyers to try once. We wait for the pullback for the buyers to try a second time, and we use those stop losses as gasoline to send this market right back down, right, to retest those lows or back down into that trading range. So don't get frustrated if it goes sideways down there. Just stay patient and wait to short the pops above the top of that trading range. And as always, right, don't be afraid if this market rolls lower. If they hold that pullback and they roll this thing lower here now, that is that 1, 2, 3 breakdown. That is your giveaway. Mark that low, mark that high, and you want that first test off the top of that channel. Remember, these types of 1, 2, 3 moves, these strong moves like this, they create so much momentum that it really doesn't matter where you are. In this case, selling that pullback will still be a very high percentage trade no matter where you are, because again, there's so much momentum on there. It creates that tension in the market we've been talking about this week, and it really makes for a very high percentage trade off the high of that channel. So again, it's a 1, 2, 3 move. And this might be earlier, right? It might go down, it might pull back, and it might jump from there, right? So it doesn't really matter. It's just the jump off the moving average gets so much momentum going for the bears that it really gives you a great shot here to grab that first pullback off the high of that channel with your failure pattern, your strength move, your traps, right? Your pullbacks coming off the top of that channel. And then I'll tell you, if they can really, if they can really get this thing going here, you've got that 12,800 area for that big range tomorrow. So we'll see how far the sellers can take it here if they do get their hands on this thing here for tomorrow. So be very careful buying this high right now. A little bit of an underwhelming move here this afternoon. Again, I have no problem buying it, but we do have to get that 1, 2, 3. Really show me proof, and I'll gladly trade I'll gladly wait for a better entry than to try to force the trade on the first pullback back there. I'd rather have a much higher percentage trade than have a trade that I just simply hope I can get into and make some money off of. Hope that makes sense out there. And again, we'll do this tomorrow morning, obviously, in the trade room, 8 o'clock Eastern time, like we always do. All right, looking at the Nasdaq here is done. How about some gold? Jumping into that gold here for tomorrow. Got the gold, of course, with that big, strong spike higher, right? Gold, of course, runs higher here. What's going on here? We had that trading range, right, from yesterday's trading session, right? That trading range from yesterday, we wind up into that trading range. We blow out of that range. We push through the pendulum swing. Okay, we talked about this last night on the newsletter. Pushed through that pendulum swing. And, of course, that pendulum swing, you'll notice, comes right back up and taps it here again. I thought that was pretty interesting how they used that pendulum swing right on both sides of this market. The reality is, though, we get that big pop-up. What a gorgeous example of a nested failure, right? Is that not just textbook right there? Strong move up. Buyers try once, buyers try twice, draw that trend line over, draw that trend line up. I mean, it doesn't get much better than that, does it? As far as a nested failure off that hidden channel. These are exactly the patterns I'm talking about at those highs on the E-mini and the Nasdaq, right, for tomorrow. So definitely keep that in mind. That's a great example, that pattern right there for the S&P, the Nasdaq, to short off the high here. And then, of course, we roll back lower, and we pretty much find ourselves just chopping around right now inside of a range. It's basically a bear market into a trading range here on the gold. You'll notice I have marked up the amount of the move above the range and then down at the low of that range, right? So I did mark that part up. That creates a big target. It is a pretty big target, but this is gold, though. Gold can do it. It's one of those marks that if it runs, it really can definitely run. So 1693, give or take a few ticks there, will be a good milestone. It's also right around the weekend gap, right? Remember, that's last Friday's close. Will we finish the day? Will we finish the week tomorrow back at last week's closing price? Last week's close is at 1698.2. We'll see, right? We'll definitely see. Got a big round number down there. Weekend gap is down there, and that pendulum swing is down there as well. So lots of great potential there for those bears. You got to fade this one, right? You really can't trade this one very easily. You got to fade this one. There's no bullishness in the market right now. This is very, very bearish. The big move that we saw today has pretty much evaporated, right? They went up, they came down and took out those lows. So the buyers right now have very little to stand on as far as any reasoning to be a buyer, other than they're pumping the markets full of stimulus right now, devaluing the dollar, which could easily be enough to send this market higher. The gold market, of course, right? A metals market will be a negative correlation to the dollar. But without going in it too far down that rabbit hole, we're bearish. And so I want to be a seller. And as we know, it's a range bound market. I want to find levels of resistance. Love that triangle. Love these swings up here. Really like this area. Really like this area right here. It's a low right there, right? Bunch of lows. Bounce, 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 right? Get some swings up there. Love how that area right there lines up with that trend line. If you're with me in the trade room every morning, you know how much I love those kind of rising trend lines here, because hopefully if I get it my way tomorrow, we'll tread water here for a little bit. It's a bear market. What do? We sell resistance levels using resistance levels above the range using that two-try failure pattern. So that would be how I would love to trade this gold, right? Going into tomorrow's trading session. Get that pop up, get those buyers to commit. Once they commit, right? Remember, we don't want to try to call the top, right? Trying to pick a top is difficult business, right? Once I get short on that top, they'll come right back, stop me out, and then come right back down again. I don't want to try to pick a top on really any market. Gold is definitely one of them. What we'll do is we'll wait for that failure, wait for the buyers to commit, and then sell right into those stop losses. Much easier, less stressful, right? Obviously not as much profit if you pick the top, but I would rather get a high percentage trade rather than a more profitable trade, personally. I'd rather have myself in the green more often than have the green be bigger every time. Just personally, right? I want to have a higher winning percentage. Those failures are a lot more reliable. And then if we do, let's say, for example, we do get that pop running higher. Let's say they do take out those highs. I can still short this thing because we're still the tops up here. The problem now is momentum, right? So if we do end up ripping higher, taking out those highs, or, honestly, even if we go maybe like, up into like this area, right? So even if we get up into that area, that will still be enough to trigger a nested failure. So if we get that run higher here, look at that pattern. Same thing, right? Same thing. Buyers try once, buyers try twice. Once those bulls commit, we know exactly where their stops are. If we get lucky, like this example here earlier, we can grab that trap. There are two easy ways to short this sucker. One is that trap. The trap is not necessary, it's not required. But if you get it, it's like a diamond in the rough, right? It's great setup. And then of course you get that failure selling into those stop losses. And don't forget too, this oftentimes will collapse back down. You can grab that channel back down and sell that pop too. So there's three different options here, right? That trap high obviously we saw back here. The failure, right? Simply selling into stop losses. And again, selling that first pullback off that new channel as it comes around. And then again, the range below us is a magnet. If you got an extra contract, leave that runner, that big round number, that pendulum swing we talked about. That's a really nice opportunity there for those bears. Now here's the question though. How do we buy it as it goes higher, right? The market pops up. How do I buy this thing? I do not. I don't. I wait for the buyers to hold this and go. If they can prove to me they can make a strong run to the high, hold that pullback, and jump, all right, I'm convinced you got me because you didn't do it there. So if you hold this time around, we must be trying to get somewhere. Where else could we be getting to? Big levels overhead. That's pretty much the only area we have to worry about right now is that 1757, 1759 area here, right on the gold here. So if we do get that strong run up, if the buyers do hold that pullback and they can get that jump, maybe it's off the trend line. Maybe it's off I don't care where it is. All I care is 1, 2, 3, right? That jump off the moving. Remember, it's not so much strength of the first leg. It's the strength of that next leg, that second leg going higher. That's the one that's got to be strong. Once we get that strong move up, I can mark up that high. I can mark up that low. And again, first test is the best test off the high of that channel. We're looking for bear traps, bullish pullbacks, strength moves, traps, failures, anything we can get our hands on at the low of that channel. And again, I'm not going to go over all the specific entry setups. I'll be here all afternoon here on this video, but I will give you more details about all those entry setups we use in our trade room as part of that free course, right? Linked up in the upper right-hand corner. So grab that as we go. So 1, 2, 3 breakout going higher. We got to get that here for the bulls to have some confidence as we go higher here. If not, we're going to short those pops here. Now, as we go lower, right? As we go lower here, would love to see a 1, 2, 3 breakdown. Right? Move to the range, mark up that low, mark up that high, getting short off the top of that channel, right? 1, 2, 3, break down, clear through this trading range, give me enough momentum going lower so I know I can trust that first pullback. Targets again, weekend gap, pendulum swing, waiting down below. If for some reason we get this thing to go down and go sideways inside this range, what do? You mark up your levels of resistance. You wait for that pop up. Yep. And we use that 2 try failure pattern. Same old story, right? And that's how trading is, guys. That is how trading is. We are not looking for variety, right? We are looking for consistency. I don't want surprises. I don't want variety. I want the same setups over and over again. I know these patterns at the back of my hand at this point. And of course, I'll make sure all of our clients know where they are tomorrow morning in our trade room. So watch out for that as it goes sideways there inside that trading range. And as always, if it does just bloodbath, right? If it collapses going lower here, don't be afraid to grab that 2 try trap, that shallow pullback, that lower low, right? And that trap here as well, right? So grab that trap. And again, Added bonus, if you can grab that low, grab that high. It isn't always available, but that's an added bonus, right, for that trap high here, right? Extra points on that one to get that little trap at the top of that channel. Not necessary, but definitely a good odds enhancer as we go lower. All right, so really, really excited about tomorrow's trading session. We got gold ready. We got Nasdaq ready. S&P's ready. Before we finish up tonight, though, I do want to remind you guys, tomorrow is a Friday. We got big news tomorrow morning at 8:30 Eastern Time. The big news of the day tomorrow is at 8:30 Eastern Time, so be aware of that. And as always, don't forget, at the same time, too, we got rollover tomorrow, most likely rollover. We talked about rollover here yesterday. We're still kind of balancing out right now on the 321 and the 621 contract here for the E-mini and the Nasdaq. It looks like the S&P is probably most likely to do the roll tomorrow, or the Nasdaq might roll tomorrow. As you can see, though, the Nasdaq is not really very close, right? Only 75,000 contracts on the Nasdaq, compared to over 500,000 on the 321. The S&P seems to be a little more realistic to do roll tomorrow. So we may get an S&P roll tomorrow. We may not get the Nasdaq roll. We know that once the 621 contract on the S&P and the Nasdaq and really all the E-minis, once that 621 contract is more volume, we'll make the move over and trade, right, that 621 contract. It looks possible for tomorrow. It might not be. It may not be until next Monday, but be aware of that. Right, watching for rollover here tomorrow. And last thing real quickly here, again, tomorrow, next week is quad witching. I will not be publishing our newsletter next week. Next week, the third week of the month of March. I will, of course, be still available to all my clients, right? But I will not be publishing our newsletter next week. So be aware, no video newsletter next week. But don't forget, right? Tomorrow morning, 8 o'clock Eastern Time, we'll be trading this stuff together. I would love to have you there, right there with me. It's easy to get registered, easy to sign up. I'll put all the information you guys need. I'll put a big button for you to get registered below tonight's video. I'll also put all the links you guys need to get registered right to our trade room in the description of this YouTube video. So again, I would love to have you there tomorrow morning, 8 o'clock Eastern Time, to finish up the second week of the month. Grab the link in the description to join the trade room tomorrow morning. And as always, right, you can always hit that button below the video tonight on our trading blog. Don't be afraid to call me if you guys have any questions, right? Don't be afraid to call if you have any questions. Use that live chat on the left, live chat on the right. And by all means, thank you guys so much for tuning in here tonight and sticking around all the way to the end. Very excited for tomorrow's trading session. Hope I'll see you there with me. If not, come back and see us again next time. Again, no newsletter next week. We'll come back for that final week of March, and we'll pick up right where we left off. As always, my name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.